What's up traders, Tom here with another video. In today's video, we'll be discussing the latest stock market news moving the markets right now, along with our technical analysis levels for the S&P 500, NASDAQ, gold, Bitcoin, US dollar and more. US dollar has probably been one of the most interesting pairs over the last couple of weeks, and the rebound we saw last night led to a stock market sell-off. So let's talk a little bit about the Fed this week and what's going on with the FOMC. Stay tuned. Alright, so as we like to do guys, let's have a look at the heat map for the last 24 hours in the stock market. Yesterday it was muted. It wasn't really crazy either way, but we did see some pretty big selling in the energy sector and of course healthcare sectors. You can see they were down substantially throughout the day. We also can see that Disney came off somewhat after its aftermarket really big boost due to the big announcements that were made. So it just shows that maybe getting into the hype is not worth it. If you're before the hype, great. If you're during the hype, maybe that's okay. But after the hype, as soon as it's closed that day, often not worth taking those positions. So what was happening in the major markets around the world in terms of the American markets? Well, we saw that the technology stocks held up while realistically the S&P 500 and Dow were bought down. Now, why were they bought down? Energy sector was a major component, healthcare as well, and you can see even industrials were kind of leading the charge down here at negative 1.3%. Now, there's a few reasons why this happened, but we'll continue to watch some of these sectors as sometimes there's a lot of value to be had in recognizing that sectors are coming out of rotation or just not hot right now. And we saw that with technology recently, with energy obviously a few weeks ago, and utilities had that big run followed by, of course, a sell-off after. Recognizing which sector is right for you at what time is going to be what takes you through multiple years worth of trading. This year's different, but most years, usually you want to recognize the sector that's hot and the sector that's not and think about why that is. So what is the market looking for this week? Well, the stock market's really waiting for the Fed's final meeting of 2020. There's a huge amount of things at stake here. We have, of course, some big problems in the US around the current crisis. We've got trade wars potentially between certain countries as well. Here in Australia, we're starting to suffer some of those impacts. And the Fed really needs to give some balance and some kind of guidance to the markets. And the markets are toppy. We know this. The markets are hot. They're heated after the US election. Everything has changed. So all of a sudden, we need the Fed more than ever. Will they be able to come out and steady the markets? We will see. But this is going to be the big news of the week. And you definitely want to watch out for the Fed's announcement later on this week with the FOMC. Make sure you have your calendar open, such as forexfactory.com, and you're very well aware of when the FOMC statements are going to be taking place and going forward. So you can see here, all the details are here for me and the timings for the FOMC statement, etc. Well worth forexfactory.com to be in your list of watching every single week. What about the CBOE put call ratios though? Are they allowing the market to go down? Well, here we've got the data from yesterday and we can see that puts actually did decline slightly coming into this day. They were very, very high on Friday and they did decline. That's good news. But when we have a look at this S&P 500 figure, look at this, 2.17. So a lot of puts were opened on the S&P 500 ahead of the Fed statement. That is not necessarily great. I prefer to see a very low put figure, as in not many puts open in the market, as many would be aware, before these kind of announcements. It gives a greater chance that the market is actually going to fall down, and that's giving us an opportunity to be able to actually say, okay, this is definitely more likely to occur because not many people expect it. Fear and greed over time still incredibly high. We can see it's come off its highs recently, and that's why the market stopped where it's currently been, and it's been sliding for a few days. Not a lot, but it's definitely been sliding down. So let's get stuck into our technical analysis right now and go through some of these things, guys. Put call ratios still sitting around nowhere really. 0.814 reading. We know that we like a 0.6 reading usually to trigger things. That's what triggered at this time, but we did see a small decline here in overall puts opened across all markets, and that is still important. We'll continue to watch this figure and then look at our technical levels of support and resistance for, of course, the S&P 500 and others. Dollar index probably becomes the most interesting pair though to look at right now. Look at this rejection. Yesterday we got to a new low. Then during the session we actually traded higher. So ahead of the Fed statement, we're still in the range between this 90.50 level and of course this 91.20 level. This is the trap that we have set for the dollar index. And this is a very important zone because in any type of break or close either way, what are we going to be looking at? Well, of course, the distance of this range will become where we expect it to go. Now, no surprises, everybody. 89.90, the 90 zone, something we've been looking for a lot on the US dollar longer term, is the extrapolation out of this range. So if we break lower, the expectation is that the market will fill this zone and move towards it very, very quickly. And that gives, of course, scalpers and day traders opportunity. But with this kind of market structure, it doesn't have a direction on the smaller time frames. So it gives you an ability to trade within the market structure and then, of course, a breakout either way, a bit of an idea about where the profit should be. And that's the beauty of technical analysis. You're recognizing structure and recognizing highly statistically likely things to occur after that structure's broken. That's the beauty of channel patterns and everything else you learn with price action. What about gold? Well, if we take a look at gold, we go down to something like a 1 hour chart here. You'll notice that it's finding a lot of support across this level here, this 1823. Why is it 1823? Who really knows? But very similar to something like silver. Look at this pattern, guys. I'm sure a lot of you are like head and shoulders, head and shoulders. Left shoulder, head, right shoulder. Important thing about the right shoulder, not only is it a little bit lower than the left shoulder, but it's making a series of lower peaks coming into the low here. So we've got lower peak, lower peak, lower peak, and we're really putting pressure on this downside momentum. Now, if this breaks, what do we generally expect gold to move towards? Well, we expect gold to go the distance of the head move. We take that out and notice how usually market structure pretty much lines up very, very well with previous lows. This is really going back to a 1770 level if it was to break underneath. So a bit of opportunity here in gold potentially if you're on the smaller time frames if these levels break. If it holds, breaks to a new high, of course that will then pretty much push in the 1874 if not 1900, and we spoke about that in our weekly analysis. But look at all these things going bearish here. 2050 exponential moving average crosses, pushing downside pressure again on gold. Very clear pattern here on the 4 hour, probably the one I'd be looking at. We go to silver, very, very similar. We're on a 2 hour here. We look at a 4 hour as well, very similar pattern. It's amazing how both of these are setting up almost identically, but remember, it has to be a close underneath these zones, and both of them have some pretty good take profit targets. So worthwhile putting on your charts, making your own analysis decisions, but gold and silver, definitely ones to watch for the FOMC statement this week. Now, one of our favorites recently has been Bitcoin, and Bitcoin has done really almost everything you want it to do. Beautiful double bottom over here on the left-hand side, followed by another test, even a new high. It then came down, found some support around this 17.6 zone, broke through that, closed above, didn't quite get back down to these moving averages here, which we would have liked to have seen. And now it's basically been channeling or flagging here on the market just before potentially breaking a new high. Now, if we break a new high here, where do we go? I wouldn't be surprised at all if this next break of these previous resistances pushes through to the 20,000 and possibly even breaks through that 20,000. We've been talking about the larger time frames. Basically, Bitcoin is coiling in the ranges. Let's go to the daily here. It's basically coiling, making a series of higher lows and kind of equal peaks in anticipation to try to get through this 20,000. Now, it may still fail to do so, but if it goes and hits 20,000, it's very unlikely to sell hard off that level because of the market structure coming into it. It's probably going to try to break 20,000 and do it so very comfortably. Remember, with Bitcoin, it likes $500 and 1,000 ranges. 20,500, 21,000, etc., are going to be the key levels to look at. Ethereum has broken through the resistance as well that we were talking about. Really nice pickup here for any day traders. Previous resistance becoming support, 2 moving averages. Beautiful little zone there. I'm sure a few of you got that one and have begun maybe purchasing it. Really, for the longer term traders though, for Ethereum, it's all been about 620. If we got up to 620, resistance, 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 probably going to act as resistance again. But if it gets through, comes back, tests again, most likely that's going to put pressure onto the $700 and possibly that $800, which is going to be key long-term resistance for Ethereum. So again, very nice movements over the last couple of days. And we can see here, very nice pickup off the 2 moving averages. It's what we like to see as technical analysts. Good quality levels happening time and time again. So let's now take a look at this SPX or the S&P 500. We like to do our analysis whenever possible on the real market, being the SPX. And you can see what's happened. Yesterday, big movement up, followed by a pretty strong rejection. And that pushed back down to 36.4750 on the close. We still are not underneath the 20 exponential moving average, which is around 36.30 on the real market. This may be different to your chart. So remember, if you see a different moving average, try to go and get the real market when you're doing your analysis. Now, we talked about in the weekend video that we think that the market could certainly come down and test this 50 exponential moving average in this correction period. Why is that? Previous resistance, previous support, 50 exponential moving average, and a 38.2 or 50 pullback of a very significant nice move up. This is kind of what happens after a market gets overheated. It pulls back to some kind of nice level and then it goes on and does the business. So 38.2 or 50 fib, well worth having on your charts, testing this range, looking at that area and setting alerts for that zone. A few people are talking about this as well. If you have a look on a monthly, what is this 38.2 fib and 50 fib also pull back into? Previous body close levels for the monthly on the SPX. So I think, again, this zone is worthwhile considering and looking at. If we take a look at the 1 hour chart here on the S&P 500, to signify what is going to go further shorting, we need to see a new low formed. We didn't see one yesterday. You can see over here, not as low as the previous low. We need to see further selling pressure, close below, retest probably of that level, and then that will come back down to the 3600 where it's going to find some support on the small time frames and hopefully trigger into that 38.2 fib pullback. So these are the zones that you're going to be watching on the charts. And remember, not every price zone or price level is important. It's just very significant ones. And when you're talking about what's happening right now, you've got a peak, you've got a trough, you've got a lower peak, and we need to see a lower trough to really solidify higher time frame change of trends towards the downside. It's that change of trend, or COT as you call it, that's important here for traders around the world. If we have a look at US 100, US 100 was certainly stronger than the S&P 500 due to the sectors that were getting belted. These 2 weak rejection candles have now been followed on by, you can see the bullish momentum that came through yesterday was quite strong here. You almost got 100 points out of it. Nice little day trade there for traders, and potentially some people entered positions because they like to see that momentum. We are going to be dictated to by what the S&P 500 does at the end of the time, but the NASDAQ has shown resilience while the S&P 500 has often flailed or failed at certain prices. So we'll continue to watch this price action, and any price underneath these wicks will be incredibly significant around this 12,200 zone. So we hope you enjoyed today's video. If you did, please remember to give us a thumbs up and also, of course, subscribe and hit the alert button. I wish everybody the best of luck this week, and of course, watch out for the FOMC statement. There could be some fireworks around that time, which is good for, of course, longer term trends and potential pullbacks in the markets. So we hope everybody's careful this week in the volatility, and of course, we'll see you for another daily video tomorrow. Bye for now.